Hi, this is Savannah Arroyo with Networth Nurse. If you want to learn how to use your small axe to build an empire, you should be listening to the Small Axe podcast with my good friend Nico.
Hey guys, it's your boy Nico here from the Small Axe Podcast. I want to show you how to use your small axe to build a lasting empire. You see, not everybody begins their investing career with millions of dollars, a huge network of investors, or the knowledge necessary to become successful in this space, and that's okay. What I focus on here on this podcast is helping you hone your skills, sharpen your tools to become the best investor that you can be. Now, I want you to sit back, relax, and enjoy this show. If you have any questions or you want to reach out to me or the guest, feel free to do so. Love you guys. Okay, Small Axe people, it's Nico, and I'm back. I'm hanging out with Savannah Arroyo. If you don't remember, she was on my show like a couple of years ago, I think. And it's been so long. She's been up to a lot, and I'm really excited to kind of catch up and learn what she's been working on. And you're going to love this episode too. So without further ado, let's get her on. Savannah, welcome to the show.
Hey, yeah, thanks for having me. I know I can't believe it's been a couple years since we last chatted, but super stoked to kind of catch up on what's going on.
Yeah. I'm excited also. So let's hear a little bit about what you've been doing over the past couple of years and what's going on now, and then we're gonna jump into it.
Yeah, definitely. So I kind of just to give a little glimpse of how I got started. So I really went out of high school knowing I wanted to be a nurse, loved nursing profession and got started in that pretty quickly. Worked in a few different settings after I graduated, in a few different roles. And although I love patient care, I love providing resources to my nurses even more. And so I started to climb into different process improvement, leadership, administration type roles, went back to school, got my master's degree in nursing leadership. And then beginning of 2020, after having my second daughter and being forced to go back to work with 3 months when she was 3 months old and having to hand her over, my husband and I kind of sat down and got really clear on what we wanted our lives to look like moving forward, what type of investments we had, how dependent we were on our W-2 income and different ways that we could offset that. And so started investing in real estate for obvious reasons. It's one of the best ways out there to grow wealth, and started off in single family homes, switched over into multifamily, and have been doing multifamily syndications ever since.
Wow, Savannah. All right, awesome stuff. There's a lot. I know there's a lot in there, but I don't really ask this question much, but I'm going to ask you this. So you mentioned there that you got into real estate investing, and there are so many things that we can invest in, right? So why didn't you like just dive into stocks, let's say?
Yeah, it was a lot of Googling too, because I had zero investing kind of background and insight. And so it was looking on YouTube of passive income, multiple streams of income. Real estate started presenting itself over and over. And when I would watch some of the real estate videos and would listen to people explain it, it just made so much sense to me to be able to buy something under market value, force appreciation into it, value add deals. Those concepts made a lot more sense to me than stocks or really crypto or anything else like that. And I felt like when I was learning about real estate investing, that there was a lot of ways that people could mitigate risk in their investments through proper research, education, investigating different markets. And so I liked that piece of it, that you could do your due diligence and mitigate a lot of risk, but still earn really great rewards.
Yeah, great answer, Savannah. Now, did you go right into syndications? Because I know you mentioned that, but or did you start with some JVs or?
Yeah, we started with single family homes. So we got a couple of build to rent projects. So we didn't really have any money to start investing when we learned about it. And so we took out a second mortgage on our primary residence. And we were so novice at this time that it was getting on the phone with our lender and saying, like, what is a second mortgage? What's equity in a home? Like, you can tap into this and take it out on a loan. And so it was a lot of education when we first got started learning about it. But we did take out the second mortgage, used it as a down payment on a couple of single family homes over in Atlanta, Georgia. We're based in Los Angeles, California. And then after that, it was like, okay, how can we do more deals? Like we got bit by the real estate bug hard, and we were wondering, how can we grow our portfolio? And then that's when we moved into syndications.
Awesome. And um, Uh, so like, what was your primary source for education at that time?
Podcasts. Podcasts were my number one, and that's honestly why I'm so passionate now about going on podcasts. Because for me, when I first got started, it was listening to people's stories from all walks of life, from different backgrounds, hearing how they made it work with different resources and different real estate strategies. It was hearing those stories over and over again that instilled in me the confidence and motivation of like, okay, I can go out there and do this. And so that's why I'm still passionate now about guesting on podcasts and sharing my story to hopefully encourage other people. But podcasts, and then I would say definitely reading books and YouTube.
Yeah, awesome. And so those are my favorite platforms as well. Now, you mentioned in there like Atlanta. Is that where you started? And if so, why?
Yeah, Atlanta, Georgia, really because, well, we were based here in Los Angeles, California, and it was a little the higher point to entry over here in LA. And so we were looking for markets that were working well in terms of rent growth, population trends, and we loved Atlanta, Georgia. We had a couple of friends that moved over there, and so we just started looking for deals over there and getting familiar with the markets. And we did this all across the country. So using even like Google Maps to walk the streets, using Zillow to look at different crime rates, school trends, price increase history, all that stuff's available on there. So we were really doing a lot of market research via tech across the country.
Another awesome answer. And it just goes to show that you don't necessarily have to live where you invest, right? But there's research and work to be done, just like you're doing. And um, did you buy any like larger multifamily in Atlanta, or did you save that for the? I know you're also investing in the West Coast. I think it's in Oregon or something
Oregon.
like that. Yeah.
Yeah. We have not invested in any multifamily over in Atlanta, Georgia. We are looking as of now. So we're starting to underwrite some deals over there. We did look back in 2020 and 2021 as well. But at that point, we were really growing our portfolio over in Oregon. We used the same broker for 5 deals. And so we just had a really great thing going up there with our team. And so we continued to build our portfolio up there, Pacific Northwest.
Yeah, awesome. And you began syndications over there. You were doing some awesome syndications. I remember, I think you had 2 or 3 at that point when last we spoke, which is a lot. I mean, you're moving quick. And tell me a little bit about the process of getting people to invest with you when you've only done, at that point, like some single family stuff.
Yeah, capital raising is a beast if you're new in this space and don't really know a lot about real estate investing, or you're just trying to kind of get started on your own, how I was back in 2020. And for me, it was doing those first initial deals over in Atlanta, those single family homes. For that, once we did that, we started to trigger a lot of interest from friends and family. I was sharing my journey on social media. I created a platform, Networth Nurse, on there that I was showcasing what we were doing and really kind of the transparency as we were going through this learning process. I think a lot of people loved it. They loved the transparency. It helped really kind of to build my brand and give me trust within the space. And so that was really kind of how I got started raising capital. In terms of kind of how the first few conversations went. I mean, we sent out kind of a feeler email to friends and family members, maybe like 30 people on a list. Of my husband and I sat down and wrote out some people that we thought might be interested. To be honest, I think only like 5 of them responded, and only a couple of them came into our first deal. For my husband and I, like our friends and family, our network of people didn't have the money to be investing, quite honestly. And so that was the point when we decided, okay, if we want to grow a real estate portfolio, we need to start putting ourselves in different networks and different communities of people, just so that we could share this resource and continue to grow our portfolio.
Yeah. I ran into the same issue, and it's important to know that, let's say you reach out. I reached out to like, I think it was 300 or 400 people in my first syndication, and I got 7 investors in. And I was, it was a huge struggle for me, and I was a little bit disappointed. But then, one of my mentors was like, "Well, wait a minute. I mean, this is a positive thing. You found out quickly, where you can land, what you can raise, and you did have some interest. It wasn't zero. I didn't get zero. I got like 250K. I was hoping for 500. I got 250, and I had to look at that as a win. So my question now to you is, in those, very select few people that responded, were there any surprises, like somebody that you really didn't realize had any capital, but actually had some?
Yeah, definitely. And those are things that you wouldn't even know if you never even talked about it. Like if no one ever spoke about it. And for me, especially in my circle, it was, I mean, people just don't really openly talk about money and investing. No one ever really did. And so, us kind of being the first to talk about it, it was cool to learn other people who were very interested in real estate investing and maybe doing their own research. And we didn't even know because we've just never talked about it. And so, although it can be a little difficult to be super vocal about everything on social media, especially like, my husband likes to keep things like private. Like we've lived a very semi-private life, and then being now moving into social media where we're sharing a lot of our journey with real estate investing was a big mindset shift for sure. But even that, like being able to talk about it more and vocalize it, it's just really kind of law of attraction stuff. Like you attract the resources to you and the conversations just because you're out there talking about it. So even like going into work now, I'm in a position where, if people are like, what did you do this weekend? Oh, flew up to Oregon to look at one of our real estate properties. Like it always kind of naturally comes up for me in conversations of like, what we're doing, what'd you do over the week? Oh, even at nursing, oh, you have the next 5 days off. Like, what are you going to do? It's like, oh, well, I'm going to be working on my real estate business. Oh, you have a real estate business, so for me, it's kind of casually bringing it into conversations. And then at that point, it just opens up more doors for you. And I want to touch on what you said about thinking you would have 500,000 and 250,000 committed. I've done 5 capital raises now, and I can say that about 50% of what I always have thought to be raised end up committing in every single raise. Just that's kind of the way it works out with the numbers.
Awesome. Thank you for sharing, Savannah. Would you mind sharing? You don't have to, but like maybe your smallest raise and your biggest raise?
Yeah, definitely. So the first raise we did, we needed about 350,000. We were only able to raise 250,000. And so I had to pull out a loan on my retirement account at the time. We were just, my husband and I were like, how to get the deal done and looking for different ways that we could leverage debt to make it work. So that's what we ended up doing to make the ends meet. And then ended up reworking like our acquisition fee. So we took out an acquisition fee for our first deal so that we could get the deal to the finish line. So there's a lot of different ways that we kind of made that first deal work when we weren't able to raise enough capital. And then since then, I've raised over $3.5 million for all of the deals, primarily from healthcare professionals, which is amazing. It's my mission is to share this information with as many healthcare professionals as possible. But a lot of that has been through my brand building on social media has a big piece of that, and a lot of referrals now too. The medical community is big on referrals. And so if you're doing good for someone, they're usually sharing it with their friends.
Oh, this is awesome. Thank you. Thank you for sharing. So I'm assuming you're still working, and I want to get to this as a nurse in a second. Um, do you have like meetup groups for these nurses, for these medical professionals? Do you host like an educational night for them or something? Or is it just a conversation by conversation kind of networking thing every day?
Oh man, I do it all. I started a Facebook group with a respiratory therapist down in Los Angeles. His name's Alex Sabio. He's huge in short-term rentals. And so him and I started a Facebook group a couple years ago. And for the first year and a half, we were doing weekly Zoom meetups, and we were bringing on people with deal dives, different experts, tax people, different brokers, lenders, anyone in the real estate community. And it was geared towards healthcare professionals who really wanted to learn. We've grown that group. It has about 4,300 people in it now. a few months ago, or after the 2022, we switched to monthly meetups. And so now we do monthly Zoom meetups. I'm actually going to be sharing tomorrow on capital raising. I'm doing a presentation. We both try and present maybe once a year, but then otherwise we'll bring guests on there and share their different resources. So I do provide a lot of value for my community through that. But I'm also really big on social media. And so that's a lot of conversations that I have day to day is like through my DMs, Facebook, LinkedIn, that type of stuff. For people who are wanting like deeper information, either about syndications or like one-on-one coaching stuff, I have additional calls that people can book and follow up. So growing my community through a lot of different ways.
Oh, and you have two kids?
Yes.
Oh
Yeah.
my God.
3 and 5 now.
Wow. More power to you. That's awesome. And you're doing a lot. Now, you mentioned at one point that your husband, it might have been prior to us hitting record, your husband is retired now. Is he doing this with you? I'm assuming yes, but explain the roles that both of you take in your business.
Yeah, definitely. We had to be on the same terms starting out with this stuff. So, my husband has always like kind of had real estate in the back of his head. Never really like talked about it a lot until we had our second daughter and sat down and we're like, okay, the real estate is going to get us to our goals. If we go all in on real estate investing, we'll be able to be, financially free from our W-2 incomes within 5 years. That was really our goal. And so, sat down, got very specific on where we wanted to be, and then created kind of an action plan of what steps we needed to take in order to get there. And I was able to walk away from my full-time job after 2 years. And then at year three, about or 2.5, my husband walked away from his full-time job, and then I went back to work part-time in the hospital just so I could hold benefits for our family. And then we relocated from SoCal up to NorCal, and so we had some big life changes. So he walked away from his W-2 a few months ago, and he is now working full-time on our real estate business. But before, as we were growing and learning about this, we went through a formal coaching program together, it was worth us to spend $30,000 on a coaching program because we were going to be raising money from friends and family. And we were also going to be putting a lot of money into this. And so we wanted to make sure we were doing everything right and not coming from any sort of real estate background or having any connections or resources. We felt that the coaching program was worth it for us. And so we invested in that and then really went through that coaching program together. So we learned all aspects of it. We were underwriting together. We went through the first couple deals kind of side by side, tag teaming everything. And then after we did those first couple deals, we've kind of split up the business so that my husband now does acquisitions and asset management. So he's out finding the deal, getting the financing for it, doing the inspection, getting it to close. And then once we get it to close, he's now managing the asset throughout the lifetime of the investment, which is super helpful because as he's underwriting it now, it's giving him more insight into his underwriting as he's been seeing these investments through the months, quarters. And so now it just kind of fine tunes his underwriting moving forward. And then I moved, he's not big in front of the camera type thing. And so I moved more into the marketing, kind of the face of the business, talking to investors, building the relationships, especially because it's geared towards healthcare professionals. That's just kind of my people. When I found out that I was going to have to capital raise, I was like a big, oh no, this was very much out of my comfort zone. Did not want to do it, but saw the bigger picture and realized that if I could do it in the most genuine way possible, which to me is like talking to other healthcare professionals, that now I'm not just selling an investment, I'm actually building the wealth of people in my community, coworkers that I work with, nurses and doctors that I work with at the hospital. Now I'm building them wealth. So it's a super cool thing to watch and grow. But yeah, we've kind of learned how to operate as a couple in the business and learned to kind of tag team different things. But communication is always the biggest focus.
Okay, got it. Awesome. I kind of assumed that based on the fact that I've spoken to you twice now on air and not your husband. I love it. And as operators, are you guys providing quarterly, monthly, yearly returns? Like, how are you doing distributions, and are your investors happy? Maybe walk through a little bit about your process working with investors.
Yeah, definitely. So, working with investors, our investments are usually 4 to 7 years in length. So we're looking for strong value add multifamily deals. So deals that really were mismanaged, we're going in there, buying them from maybe owners who didn't take care of it to its fullest extent, weren't really operating it as a business. So we're going in there, finding these deals. We're repairing some of the maintenance, and it allows us to increase rents and force appreciation into the deal. So we cash out our investors along the way. So every quarter they're getting disbursements, and then the biggest return comes when we go to sell or refinance in around 4 to 7 years. So our goal is to get 100% ROI to our investors. So if they're investing $50,000 with us, our goal is to give them that $50,000 plus another $50,000 on top of it throughout the lifetime of the investment. We do a few deals a year, and we have an investor portal that really keeps all this information in one spot. It's great. We do a deal deck when we have a deal coming up, and showcase the market it's in, why we love the market, the business strategy, what the projected returns are. From there, we take our reservations and get our investors in our projects. And we're looking for anywhere between like 15 to 20% AAR, like 6 to 9% cash on cash. And so far, since we've been doing these deals, we have always over delivered on all of our projections for investors. So it's very important for us to do very conservative underwriting. And with that, we've been able to over deliver for our investors. So we have very happy investors right now, and I'm going to continue to keep raising.
Oh, congratulations. That's phenomenal. Savannah, I love all of this. Can you kind of give us some color on what it's like with finding properties or buying properties in Oregon, and or maybe some nuances to investing there that might be different in other markets?
Yeah, really broker relations is huge. Establishing a broker who's sourcing you these deals or some sort of deal flow is the first step in finding a good one. And so it is a relationship sport. So for us, creating great relationships with brokers is giving them timely responses and feedback for what they're sending us. So we always make it a goal to respond back to them within 48 hours of them sending us a deal. Even if it doesn't work, it's just a, hey, this isn't going to work, or I'm not able to meet the returns for my investors with this deal. Shoot me what else you got type thing. And that closing the loop in the communication is something that a lot of investors miss. And for brokers who are sending out these deals to hundreds of investors, if you're one of the few that's actually responding to everything they send you, you will set yourself apart. And so that's something that we do to maintain those relationships. Up in Oregon, there is rent control, but for instance, for 2023, I think it's 9.3 or 9.1, I believe. And so on all of our projections and the deals and investments that we're doing, we're never expecting to increase rent that much year after year. That's actually pretty aggressive, just in any market. And so we're able to make all of our deals work based on the underwriting that we're doing. And so the rent control isn't really a huge factor for us. And something that's different maybe from Los Angeles, California, is if a tenant moves out at a very below market value rate, you can increase it up to fair market value, which in some markets you're unable to do that in, but in Oregon you are able to do that. So that's something that's maybe a little bit different. But lending terms, we've learned a few different things with those. At first, we did a credit union for our first deal, but those are a little bit difficult to do syndications with because they're expecting to see 51% ownership sign on the loan. And when you're doing a syndication where your investors own majority of the investment and you don't have them signing on the loan, that can be a little difficult. So we had to kind of navigate through some different things there. But overall, I would say it's comparable to doing real estate in other markets.
Awesome. Great answer, Savannah. Thank you. All right, we're going to kind of wind it down. This is incredible. There's so many questions I have, but let's leave this. Let's leave the conversation here because people can reach out to you, and I think that would be phenomenal if they did so. But before we get them that information of reaching out to you, I would love to ask you my final question. And I asked it to you a couple of years ago. I don't remember your answer, and you might not have the same answer or whatever it is. It's all good. And let's see what comes out of this. All right. Imagine it was 100 years from now. You have great, great grandchildren, and they're super happy, and they want to write a book about you to honor you and your husband and your legacy. What would you want them to title this book?
Oh, I would say how we increased financial wellness for healthcare professionals. Right now, I'm actually building a startup. It's called Invest Health, and it's a financial wellness platform for healthcare professionals. And it's really evolved a lot from my real estate investing career and the conversations that's led me to just having very open, honest conversations with healthcare professionals about their finances and their investing goals. And I realized that there are a lot of people and taboo stigma of talking about these conversations. And so our goal with the platform is to really empower and to educate healthcare professionals on investing.
Oh, that's awesome. You're living it and doing it. Thank you, Savannah. All right, let's get the listeners some form of contacting you.
Yeah, definitely. So I'm super active on social media. It's really one of the best ways to get in touch with me and follow along with what I'm doing. So LinkedIn, YouTube, Twitter, Instagram, TikTok, all the things. And then I have a couple websites. So networthnurse.co and then investhealth.com. And so if you're interested in learning more about me and what I'm doing, I would love to connect. I love connecting with investors interested in this stuff. So if you're interested, reach out. I'd love to chat.
All right, awesome, Savannah. Well, I want to say it has been an honor and pleasure to talk to you again today. And we got to do this in a few months rather than in a couple of years now. I'm going to catch up with you in about 6 months, and we'll hear your story and your journey again and what you're working on.
Awesome. Thanks so much for having me.
All right, have an awesome day.
All right. Hey, Small Axe community. I would like to say thank you for listening to another episode of my podcast where we show you how to use your small axe to build a lasting empire. Now, if you liked what you heard, it would mean the world to me if you would subscribe, leave a 5-star rating, and write a review. Also, if you want to get in touch with me, go to my website at smalaxecommunities.com. Book a call with me. And until the next episode, keep sharpening those axes.